Hi, my name is Kah Meng. I'm the co-founder and CEO of Funding Societies in Malaysia. Funding Societies is a SME digital financial services provider. In Malaysia, we are regulated and recognized by the Securities Commission of Malaysia. Funding Societies is a digital SME financing platform focusing on serving micro, small, medium-sized SMEs to get access to financing for their working capital purposes, which includes things like paying for salaries, paying for marketing expenditures, or just simply buying more inventory to expand their business. The financing that we provide generally are shorter term in nature, which fits into the working capital nature of the use of the funds, generally up to 12 months in tenure. On the investor side, investors can also come onto our platform to invest into these local businesses, earning an interest return in the midst while supporting SMEs to get access to financing to grow their business. So before we started Funding Societies, we started off our operations in Singapore in 2015. We moved into Indonesia in 2016, and 2017 is when we launched in Malaysia. So before Funding Societies, I was working as a consultant, advising senior stakeholders across financial institutions across Southeast Asia, focusing on the SME and retail banking space. And we saw the opportunity for us to better serve the SMEs in terms of access to financial services than what is currently offered within the traditional financial services landscape. So when we had the opportunity to come into Malaysia, I think one big piece of it was basically doing the necessary regulatory landscape and the market conditions right for it. In 2017, we found that it was the right time and the right place for us to launch digital financial services platforms such as Funding Societies. And the aim for us at that point in time is really to provide access, easy and quick access to financing for SMEs that are within the micro, small and medium-sized business space. What were the challenges that we faced when starting our Funding Societies in Malaysia? Being in the financial services space, one of the key challenges is in terms of building the credibility and the brand and ultimately the trust with our users. So, and the reason is because we are dealing with money. So whether with investors or with even SMEs that are getting financing themselves, the whole application process and the whole journey of actually getting access to financial services and financing is that you have to reveal a lot of information about your company, your personal information, and so on and so forth. And a big driver and underlying enabler for that is that are they able to trust us enough to start sharing this information so that we are able to do the risk assessment and do due diligence as necessary. So that was one of the biggest challenges that we faced when we were first starting out. I think fortunately, the market for SME financing at a point in time has already been started to be regulated. And this gives a lot of credibility to players and market operators like us to come into the market and saying that we are regulated and we are overseen by a regulator, third-party regulator, to protect our customers. So the question is it harder for us to break into the market being a startup compared to an established bank? The short answer to that question is yes, especially because we are in the financial services sector. So not just being a startup, but having to deal with investor and SME funds is a core part of our business model. And hence the trust, the regulations and oversight becomes a very critical piece in order for us to succeed in building a sustainable business over time. And I think this is, compared to a lot of other startups, might be a big challenge. Because right now you're not just giving out a service or an offering for free, but you're actually collecting a lot of very sensitive information about your customers. So I think that is one of the big differences in terms of us not being just a startup, but also being a startup within the financial services space that is regulated. And I think how we have been able to sort of overcome this difficulty is to consistently going out there and to promote and to educate and to build awareness with our users. So we have been very active in our early days until today, speaking to and giving like different webinars, providing different options and avenues for people to reach out to us, participating in a lot of the ministry and a lot of the regulatory educational programs, and so on and so forth. I think these are some of the things that we've been doing since day one. I think more recently also is that working with many different partners to basically reach out to more SMEs out there and gaining their trust and getting them onto our platform for financial services. So I think first and foremost is you have to be very passionate about the problem that you're trying to solve. And the reason for that is very clear, is that there is no certainty that you will succeed in your venture. And even if you do succeed, like, it may take a very long period of time, in which case you may not see any quick wins or any successes or milestones that you achieve. So it's really about persevering and having that grit along the journey. And hence, the only thing that's going to keep you moving is really your passion and your interest in the problem that you're trying to solve. I think the silver lining to that is that a lot of the businesses are then required to have a step change in terms of the adoption of digital technologies, which places a company like Funding Service well positioned to tap into this trend, to be able to reach out to more SMEs at scale, right, in a cost-efficient manner through digital partnerships such as Lazada, Foodpanda, and other e-commerce platforms, as well as being able to do our due diligence and our risk assessment using alternative data with the consent of the user. And this would effectively allow many more people to qualify for financing and to help them in order to get access to financing, especially at this point in time. I think on the other hand also, the focus for us is on the micro and small businesses compared to larger SMEs and commercial customers that banks generally focus on serving. And I think the impact of the pandemic right now is definitely more felt on the micro and small business. And I think that's where we provide a much needed level of support in this current environment, while still being very responsible in terms of how we make our credit assessment decisions through partnerships, through the use of alternative data.